Morning, everybody. It's Wednesday, May 29th. This is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at July corn down 2.5 at 460. July soybeans were down 7.25 at 1222 and a quarter, and July Chicago wheat was down 5 3/4 at 694.5. Yesterday afternoon, we had crop progress and conditions report released by the USDA. Corn plantings at 83%. That was up from 70% the previous week and just slightly above the 5-year average of 82%. Soybeans are 68% planted. That was versus 52% a week ago and 63% again for the 5-year average. Winter wheat ratings fell 1% to 48% in the good to excellent category. This is still the highest rating for winter wheat for this time of year since 2021. Good morning, guys. Hope everybody's doing well. I guess the big thing here as we were starting this morning, talking about planning progress. And, I thought, Dustin, I thought you brought up a good point just in terms of, looking at a longer period and average for corn, tells a little bit different story than just looking at this 5-year average that accounts for 2019. So maybe, start addressing that for us here this morning. We'll kick it around the room and take it from there.
Yeah, thanks, Dan. Yeah, so actually a customer brought it up just because we were referencing the 5-year average yesterday, and the fact that we have had some pretty slow planting years, 2022, 2019 in that 5-year average. What would it look like if you were to either take those out or go to a longer term average? And it is the case that, 83% planted for corn is, quite a bit behind like the 20-year moving average. Or you go back to 2001, for example, we're closer to 89.6 average planted. If you take out 2019, then your average is about 91% planted by this week. So corn definitely behind pace. There's no question. And, to the point that we were kind of making yesterday in the morning, 181, for corn and the trend line for beans, definitely, I think we're not starting off predisposed to more than likely get to those numbers, just for how it went in. Obviously, weather could be really good and we can still get there this summer. But, when you take the growing season as a whole, accumulative of all weather conditions, this is not a great start to the season by any means.
Yeah, just to add to that, I think, we've always talked about over the years, if you look at, how you look at a corn yield and you have all these different, check boxes of things that have to add up to get a record. And, early planting and good stands is one, right? So we're checking off some of those boxes that are just kind of in the negative column, to your point, not that good pollination weather, good precipitation, cool temperatures, all those things could happen to, make up for that or even, go above and beyond the negative of that kind of later planting. But so it's just something that, with what we're starting at these record yields, where corn, we're starting at over 3 bushels over a record, I think's very unlikely on today's date. Not that it can't happen, of course it can still happen, but, I think everyone, kind of cheering that, okay, we hit close to the 5-year average, like that, late planting thing was kind of a joke. To your point, I think we're actually, a decent amount, 20% or more is going to be planted after, well after an ideal window. So that is just a negative thing. Not that we can't, like I said, make up for it, but it's definitely not in our favor.
Yeah, I mean, you look at the weather and you've got between 3 to 5 days of a pretty good drying pattern across the belt, and then it gets wet again, so it'll be interesting to see guys get that, first part of June, get it wrapped up, or what what's going to happen there.
Well, Justin, I think you made a good point too. It wouldn't take much of a corn yield, right, drop from that trend to make the balance sheet kind of interesting. Right? I mean, I think a lot of the argument on the other side of the equation is, look at, we came out of a drought in a lot of the big growing states, like especially Iowa. So the drought monitor has, been obliterated right? So really good soil moisture coming into the growing season. So I think maybe you kind of take that, maybe you take the top end down for yield, and even the bottom end I think you could raise for yield as far as risk goes, as far as a big trend move, or excuse me, a big yield move from trend. But like you were making the point, even a few bushel reduction from that trend line yield makes the corn balance sheet a little interesting, especially at these prices.
Yeah, I think so. I think especially with demand being strong, and Safrina, we talked about this yesterday, but with Safrina being a question and demand already being strong, if you went back to a new record of 178, 3 bushels, which I think is a fair starting point, you're under 2 billion. You're probably close to 1.8. I think it's hard to justify rationing at these prices, to say that we won't drop carry out with yield going down, because it's still enough bushels at 1.8. But now you're kind of on the level of, okay, you have to have a record crop still. So, to get into kind of just an averagey type crop of 175, you're getting kind of tight on the balance sheet a little bit. Maybe it justifies a little bit of rationing, especially if demand really, really cranks up. And I think we're starting to prove that, that 450 area has a good demand base right now. So it's not like we've run to $6 and you can say, well, we're just going to cut demand off if we cut yield. That happens at a price. I think that's one of the things that I can't stand with analysts, is just taking yield difference and adding to or subtracting from carryout based on current USDA demand estimates. It's price and yield, or sorry, it's price that dictates demand. So yeah, you can cut demand 400 million bushels, but it's not at 450. And the same as you can add, when you have surpluses and you just say, okay, we're just going to export a whole bunch more beans, for example. Beans is a good example. This year, we just found, what is it, 300, 400 million more demand for exports and crush that we're just going to do because we need to prevent a burdensome carryout. That can happen, and that usually does happen, but it's at a certain price. So price dictates how demand changes. It's not just because we need it to. Right? If we needed to, the market goes to find that demand or to take that demand away. So I think that's kind of the point we're at is, we talked a bunch about this yesterday. Corn feels like it's a global and U.S. balance sheet that's getting tighter, and soybeans feel like it's getting more burdensome, but still have to grow the bean crop. They're still using a record 52 yield on beans, and you're not necessarily on that pace either, as far as current planting progress. I mean, we're a little better off than corn, but you still have got 30% of the beans to get in. So kind of a wet forecast. So that's certainly not written down in stone yet either.
Justin, Sovicon came out this morning. They lowered their Russian wheat estimate down to 82.1. They were at 85.7. So, I mean, we've seen private analysts continue to write down. Maybe just a few thoughts on kind of that global wheat picture, given all the troubles we've had with Russia.
Yeah, wheat's like there's a lot of ex-traders that have like "do not trade wheat" tattooed on their forehead, because it's such a difficult one. And at any given point, there's somebody around the world harvesting wheat. So
right.
There's so many countries that grow wheat. Obviously, Russia's a giant exporter, kind of a bellwether when it comes to dictating global wheat markets. So, and they have a big problem, and with the Russia-Ukraine stuff still going on, like it is an issue. And if you look at ending stocks for stocks to use for exporting countries, it's very tight. Obviously that's why we've rallied. So it's not like it's a surprise. I mean, I think we're probably kind of trading these numbers. We're trying to figure out how bad it actually is. Does that actually translate into U.S. demand? That's TBD. We're usually the place of last resort.
Sure.
And usually that's kind of the end, is when they start buying U.S. wheat. It's kind of, wheat runs away from demand for some reason. I think it likes the storing charges and making money storing wheat here. But yeah, I think it's legit. And I think it's, it firms up the coarse grain balance sheets, as we've talked about. You start shifting even 5 or 10% of global wheat feeding to different coarse grains, and it firms everything up. It's part of that whole thing we talked about for the last few months of sometimes it's a series of really small changes. It's not just an obvious thing that shifts from a bear market to a bull market. It can be a whole bunch of little things, you know, losing some corn acres, maybe having a little late planting, you know, Russia gets a little drought, you know, all these kind of things that kind of add up to a bigger thing. And so now I think it just puts more emphasis on a good growing season this year.
That's very
with
good.
what we think. And another thing I'd like to add is from all indications that we have, the farmer's actually quite a bit ahead of new crop sales. So it went from being way behind old crop to, I think, catching up on old crop. And, you know, if you like selling old crop, you might as well sell new crop because it's 30 cents higher.
And you're referencing corn there, Justin?
I am.
Okay.
And I think probably beans to some degree. You know, rightfully so, like, you know, you were looking at $4 corn. Now you're looking at $5 corn, right? So the instinct is like, man, I got bailed out. I got to sell it all. And that might be the right play, but I think just it's going to be really interesting here because it's been a really big shift of way undersold by the farmer to caught up and maybe even above average sales here, with maybe a lot of those sales even being in structured type products where there's double ups and, you know, even willing to give up, you know, put more risk into being more sold to have a little bit higher premium. So if it could work out fantastically, you know, if you know, soil moisture is recharged, like Jason said, if we keep spoon feeding this crop and temperatures stay pretty mild, $5 is probably going to look like a great sale. So I don't want to, you know, discount that by any means. And if it works, I understand why you should get sales on, and you should certainly have some kind of as we always talk about, a plan B here. Now that you've had this nice rally, but also just be cautious about, you know, being oversold or overcommitted just because we're at $5. You know, $5 was cheap to everybody 6 months ago. Now all of a sudden it's super expensive. And it's just what the market does a good job of switching the whole market psyche on what a price means. So I would just be cautious on that, and you know, just kind of try to weigh all the options here because we're at this big inflection point and we have to prove a growing season.
Yeah, and I just want to make some points here too, because right now we've got, you know, outside markets down a little bit. We've got threats from the east. There's some geopolitical tension here with China still. Some things could happen. So while we're definitely promoting being cautious, not selling everything all at $5, because in my opinion that's a losing price at average yields for most growers. You know, if you go off of university data, especially. But it doesn't mean that we aren't doing things still to mitigate risk, right? It just doesn't have to be so black and white of to sell or not sell. It's to, you know, find that balance where you have enough protection that you're ahead of the crowd. Most people probably aren't doing enough downside plan B coverage, but you still can recoup with something left to sell to dollar cost average on the way back up. And it's a fine balance here of not doing anything at all or doing too much. And that really depends on each person individually and what type of ground they have, what type of cost they have. But just want to be bring a balanced answer to that too. So.
Yep. 100%.
I think that's a really good point. We've got a couple minutes here before we come to the open. Ryland, a couple of stories out this morning, pretty interesting. 4.2 million birds infected in an Iowa egg-laying chicken flock, announced overnight in Sioux County, I believe, Iowa. It's the biggest outbreak since 22. And we know egg prices did surge in 22, given that that was like 5 million infected birds in 22. And then I know there was another cattle story out as well this morning. So maybe touch on those and talk about the open here.
Yeah, no, that's this bird flu outbreak, you know, it's apparently massive. So I think it's something that the surrounding area is really going to be cautious about. I doubt it's really going to bleed too much in the cattle directly itself, just because it doesn't quite surround, you know, we're not seeing any headlines of anybody, any human to or cow to human transmission on that. So we'll kind of just take that in stride. I mean, it seems like it's a good opportunity for any egg producer to, you know, raise their prices if they can. So we'll see how that kind of translates here. But overall, there was a more interesting story, I kind of thought, at least on the FDA approving this Elanco Animal Health Incorporated company feed additive called Bovaer, supposed to reduce methane emissions by 30%. So it just got approved in dairy cows. So there's been some rumbling in the industry about this feed additive, and it's kind of like a miracle thing. I don't know if it's just a political push or if it's an advertising campaign or what throughout the industry, but there's been a lot of chatter about it. And I think the hope is that like it can keep cattle on, that there's more to the story than just reducing emissions, that it has some other benefits as well, like keeping cattle on feed longer, or, actually reducing some of the, coarse grains in rations because of it. So still a lot more questions, I think, about this, but I think this is going to be a really important story, kind of down the road, and we'll have to see if this actually takes hold. So anytime, feed additives are always, kind of questionable just how widespread they're going to get used, but it sounds like some of the majors have really been kind of eyeballing some of this stuff from their own supply. So we'll see how that shapes up, but I think that is kind of a big deal, especially with the kind of climate agenda that's going on with this administration. So I think it kind of gets everybody on the right side if this does what it says it does. So I think that's pretty important.
Very good. We'll keep a close eye on that, and any updates we'll certainly be passing those along. Just came into the open here. We got July corn down 459 3/4 is the last. July soybeans are down 4 3/4, 1224 3/4, and July Chicago wheat's down 4 3/4 at 695 1/2. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there today, guys. It was a good discussion. Hope everybody has a great day, and we look forward to talking to you tomorrow.